So for all of you here today, you're attending a training on how do you assess for a financial capacity. Next slide. And here are my the disclosures which we have to state. I have nothing to disclose. I have no conflict of interest, and that is for you to take a look at. And if we can move to the next slide. So here are my objectives for today. Understand the components of capacity and the domains of cognition. Gain knowledge of financial capacity and how you can actually assess for it. Learn about risk factors for financial abuse and exploitation. So really, I'm going to focus really on that middle bullet point, learning objective. That will be most of my talk today. Next slide. So this is something for all of you to reflect on before we dive into this topic. The everyday use of money is highly correlated to the general success with independent living. Loss of financial skills is a litmus test for declining capacity to live independently and care for oneself. So let's just think about it for a minute more, that it's loss of financial skills should absolutely raise a red flag for you. It should be a litmus test. Hey, I need to be doing something if my client is exhibiting, exhibiting these signs which are concerning. Because guess what? This could be an indicator of declining capacity to live independently. Next slide. So what are these skills I'm referring to? So core financial skills that all adults must retain to live independently include basic monetary skills such as identifying and counting money, understanding debt and loans, conducting cash transactions. For example, like at a grocery store, paying bills, and maintaining judgment to conduct financial activities prudently, and that you are able to protect and avoid financial abuse and exploitation. So these are like the core financial skills that I was referring to you to in that first slide, that this is what we all should have to be able to live independently. And if anyone is slipping up on this, it is a litmus test for, hey, I need to be really looking into capacity. Next slide. So what is financial capacity? It is the capacity of an individual to manage money and financial assets, like you may have a car, you may have a home, you may have stocks, so financial assets in ways that meet a person's needs and which are consistent with their values and self-interest. So it's your ability to manage your money and financial assets. It represents a broad continuum of activities and skills that can vary across individuals based on their experience, their background, their socioeconomic status, occupational attainment, and financial experience. And this is really, really important. And I'll give you an example. What I just said, it varies across a number of different points, including, we just said socioeconomic status, occupational attainment, also sociocultural. For example, in this current cohort of older adults, who are already in their 70s and 80s, it's very common, especially in a married couple or a long-term partnership, that the male in the relationship, the husband or the male partner, managed all the finances, and that when that person dies or passes away, the wife is unable to really get a handle on everything in terms of managing everything, because that was not a skill that she learned or acquired over the course of these many years. And it was not also culturally, the norm. And so we call that a cohort effect. So it's not that she doesn't have capacity. It's just a cultural phenomenon that in that era, 40s, if you grew up in the 40s and the 50s, it was not common for women to have, a huge skill set in financial asset management and money management. And so we call that again a cohort effect. That means it's an effect of the cohort, the current cohort of older women. And it doesn't indicate a red flag for capacity. Yes, you need to still figure out, how you're going to help this person. But it's not a capacity issue. It is what I call a capability issue. That means they have not developed that capability to manage skills. And sometimes, we have other groups of people, like people with some disabilities, where it is very, very important for us to kind of ascertain whether this is a capacity issue or is it a capability issue. And I can tell you, having worked in this field, especially with people with serious mental illness, it is more frequently than not a capability issue. We don't teach them financial literacy. We don't teach them financial skills. We don't teach how to budget, but we are very quick to send them to a representative payee status. So it's very important to understand that this capacity for financial capacity is based on all of that: experience, background, socioeconomic status, your occupational attainment, which sometimes ties with also your educational attainment, and then what financial experience you have. So just remember that concept of cohort effect and also capacity versus capability. Next slide. And I just want to bring home the demographic reality, why we are here today talking about older adults. First of all, currently Oregon's population is over 18% are older adults. And by 1/8, and by 2030, we'll have 1 million older adults in Oregon. We are slightly over 4 million, our population. The census data just released that Oregon has actually had some substantial growth of 10% between the two census tenures. But yes, 1 million older adults in Oregon. The aging of the US population presents both a challenge and an opportunity for financial services. And look at that, adults over age 50 control more than 80% of all US assets. That means they hold over, I think I read somewhere, like $3 trillion in wealth. Meanwhile, nearly a quarter of Americans over the age of 65 experience some form of diminished mental capacity, putting them at risk for poor financial decision-making and for exploitation. Currently in Oregon, we have 70,000 older adults who have a dementia. And that number is only going to increase exponentially. So again, think about it. This age group holds 80% of the wealth in the United States. And that puts them at risk if they are exhibiting diminished mental capacity for exploitation or for just making bad financial decisions. Next slide. So what is capacity? I told you what is financial capacity. I'm just talking now broadly about capacity. Capacity is the functional ability to make decisions. So you have the wherewithal to make a decision, but very importantly also that you can actually carry that decision out, or you can put that decision into effect. You can carry it out. And capacity is function specific. That means you can have the ability to decide on some aspects of your life, but maybe not on others. Therefore, some can have capacity to make some decisions and not make other decisions. For example, I told you about that cohort effect for women, or maybe you have a mental, some kind of a diminished mental capacity. You may be able to make decisions about who your friends are, whom you'd like to stay in touch with, or even where you'd like to go shopping. But you may not be able to make larger decisions like where should I invest my money, or should I sell my home and move into an assisted living? You may need help there. Next slide. And what's the difference between capacity and competence? Competence is a legal term or a legal construct, and it is binary and it's global. So you have it or you don't have it. It's a yes or no scenario, and really a court determines it. Capacity, however, is not a legal construct. It's actually a clinical construct, and it is actually viewed on a continuum, or what we call a sliding scale, what I just alluded to earlier. And all of us determine capacity, not a judge. And I'm using clinicians in the broadest sense of the term. Okay, so next slide. Here I'm giving you a case example. For example, for financial capacity, Mrs. Johnston's capacity was assessed specifically to find out if she has the capacity to pay her bills, including rent, to buy items to meet her everyday needs, to buy gifts for her family and friends. And this is what the assessment stated. Mrs. Johnston lacks the capacity to understand the consequences of not paying her bills on time, including the possible consequences of utilities being cut off and eviction if the rent is not paid. So she doesn't have the capacity to understand that. However, it was also recorded, she has the capacity to decide what to buy on a day-to-day basis when supported with budgeting. This capacity to buy gifts for her family, and she has the capacity to buy gifts for her family and friends when supported with shopping. So can you see? It was on a sliding scale, and it was task specific. It was decided, no, she cannot, she does not understand the consequences of, not paying her utilities, not paying her rent, but she definitely has capacity to make those other decisions when she's supported with a budget. So Mrs. Johnson, you have $10 to spend on gifts. That would be presenting her with a budget and then helping her, shop within those $10. She can absolutely make that decision. So I wanted to kind of give you a concrete example. Next slide. So I just again want to just continue on this kind of thread of legal competency, incompetency. So this one, when we say someone is incompetent, that global binary yes, no, it denotes a legal status. It is a legal status. And the judgment is based on, by the way, also on clinical evidence, lay evidence, case and statutory law. So it's a pretty thorough process. And then it takes into account principles of justice and other non-clinical factors. And then the judgment of incompetency is made, which alters the legal status of the person by removing their rights to self-determination for specific matters. It could be for finances, it could be for healthcare, it's generally stated in the document. And what happens once you get the status? It requires a transfer of decisional authority to a court-appointed proxy, such as a guardian or a conservator. That's how it works. Next slide. So again, going back to the question of what is financial decision-making? It can range from whether or not to buy a gallon of milk or make a complex decision about a portfolio of shares. So yes, it includes that mundane thing of buying groceries, or do I have the wherewithal to understand how to invest, or what does my portfolio looks like? It is important to strike a balance between protecting the person from financial abuse with the need to preserve their independence and autonomy. And that's kind of at the crux of this, for all of us who work in this field. How do we maintain that balance? How do we strike that balance? Next slide. So financial capacity has a performance aspect and a judgment aspect. So it has performance and judgment. A person must perform a variety of tasks and skills to meet that performance threshold, such as understanding financial concepts, monetary skills, cash transactions in a store, bill payment. So those are all performance aspects. Then there's the judgment aspect. Are they able to exercise good judgment and good decision making in promoting their own financial well-being and self-interest? For example, I've been on many APS consults and visits with adult protective services where a caregiver has come into a person's life, and within 2 weeks, the care recipient is writing checks to the tune of 10,000 and 40,000 to the caregiver, handing over their car keys. What do you do then? Obviously, you look at judgment and their ability to make those decisions. Is it in their own best interest, or what's driving these interests? So next slide. So really, it is two aspects. It is performance plus judgment equals financial capacity. So that's what we are looking at, when we make this determination. Next slide. And so there are three abilities that older adults should have for financial capacity. So first one is what we call declarative knowledge, the ability to actually describe financial concepts. Like what's a bank statement and what does money do? So second is procedural knowledge, the ability, for example, to write checks. So that's the procedure. It's kind of knowledge you have intuitively because you've picked it up over the course of your lifetime. So that is procedural knowledge. And then the last one is judgment, that you can make sound financial decisions, which are mostly kind of in your best self-interest. And these three things actually tap into a wide range of skills: money skills, bill payment, checkbook management, bank statement management, fraud awareness and detection, and knowledge of investment. So they're pretty they're from simple to complex. Next slide. So what are the consequences of loss of financial capacity? So one is economic and financial. You have difficulty paying your bills, you can't handle basic financial tasks, and you may be kind of endangering your assets. And let me tell you, there have been some very high profile cases in Oregon, several of them in the metro area, where very vulnerable adults, who lived on large farmlands, just wrote off and undersold their farmlands of several thousand acres to a neighbor, for some pittance. I mean, so there's, believe me, endangering assets is a huge thing. And we're going to look at some data at the end for Oregon. It can have clinical significance. Impairments, I already said, in financial skills and judgment are early functional changes of dementia. Remember, I said it's a litmus test for capacity. It should raise a red flag for, hey, could this be something happening to their brain, like dementia? So there's clinical significance. Obviously, there's legal consequences, that it opens you up for financial exploitation if you are having this loss of capacity, and can also lead to that whole area of competency. I'm not talking about capacity competency, where you may need a conservator or a guardian. So those are the consequences. And now I just want to go into the next slide, into some kind of interventions, kind of legal and quasi-legal, which are very common. So many people say, okay, I'm going to have a joint bank account with my daughter or with my friend or whatever. What can go wrong? Many people find a joint account to be the easiest way to pay a loved one's bills and keep track of their expenses. But doing a joint account is not without risks. The second person of the account can use the signing in or ATM privilege to steal from your loved one's account. And let me tell you, that's rampant. Creditors of either person may try to control debts from your account. Money in the account when either person dies belongs to the surviving account holder. Did you know that? Yeah. And this can create a conflict among potential heirs. Depending on where your loved ones live, you may be able to avoid these pitfalls with what's called a convenience account. And again, that is, depending where you live, with which about half the states allow. So you would need to check with your banks here in Oregon. With a convenience account, a second person can be designated to make transactions, but only for the benefit of the original account holder. And the second person does not get to use the money or inherit it when the original holder dies. So find out from your local your local banks here in Oregon, whether your older adult or client can set up what's called a convenience account. Next slide. And then you have this whole concept of fiduciary. So while the older adult, or while all of us who are getting older are healthy, your loved one should choose a trusted family member or friend to serve as a fiduciary, a legal guardian of their assets. And what can this fiduciary do? They can make financial decisions for someone who becomes unable to manage their money. This can be done only if your loved one is, you have to be competent to set this up. And obviously you have to consult a lawyer on this. I'm just giving you some tips on what's out there to create create this kind of fiduciary setup. Then there is, next slide, there is the power of attorney, sometimes called durable power of attorney. And again, this is a legal document in which one person assigns another the power to make financial decisions on their behalf. Should the assigner, the person who is assigning you with that power, become unable to make decisions. And the person who's assigned the power of attorney is called an agent or attorney in fact. Without power of attorney or a trust, the family risks having to go to court to file for a guardianship. And we all know when the person becomes incapacitated. And it is a fairly lengthy and prohibitively expensive process and time consuming. So these are good conversations to have with your family members, or if you're older adults yourself, to think about it. Then next slide, then there is the whole intervention of trustee. So while of a sound mind, and this is when you have larger financial assets, this is a good thing to look at. Your loved one transfers assets into what's called a revocable living trust and names a trustee. If in the future your loved one loses capacity, the trustee becomes responsible for keeping the trust's property safe. And it can include all your assets, houses, money, shares. So you create a revocable living trust. And again, I'm not an attorney, so if you have specifics about it, you would really need to consult an elder law attorney to understand this. And if you'll want a training of this, put it in the chat box, and I can work with Angela to have maybe an attorney come and present. Among other things, this could mean putting valuable items in a safe box. It could be jewelry. It could be, land deeds. I mean, it could be anything. Maintaining insurance, all wherever it's needed, paying taxes, making investment decisions. As long as your loved one can make these decisions, the terms of the trust allow it, or he or she can change it or end the trust if they have the capacity. So this is also an option. It's called the revocable living trust, but it's generally for people who have, large assets. So next slide. And then this, I think we are all familiar with, professional fiduciary. You may want to hire a professional with experience in money management to oversee financial decisions, particularly if your loved one has extensive or very complicated assets. And here, the Consumer Financial Protection Bureau for older Americans provides resources to walk fiduciaries through this job. So I have just put it there as a resource for you to check out. But what I'm more interested in is the next slide, which many of us in social services use quite a bit. Government fiduciary. These fiduciaries are appointed by a government agency to manage benefit payments issued by that agency, such as Social Security Administration and the Department of Veterans Affairs. They are typically family members or close friends of the beneficiary, but it could also be a qualified organization, for example, such as a nursing home, may also become a government fiduciary. They are authorized to use the benefit payments for a loved one's care and well-being, but cannot manage other assets. It's only that Social Security or the veterans benefit. They're only responsible for that. Other things require either power of attorney or trusteeship or all the other interventions I mentioned. So next slide. So these government fiduciary is what we call representative payee for Social Security. I have used this widely in my career when working with individuals with serious mental illness or with intellectual disabilities. So it is people or entities appointed to manage a recipient's Social Security benefits are called representative payees. They must keep track on how they use the money, the funds, and make records available to Social Security for review or for an audit. And for some payees, these reviews are mandatory. Then for veterans benefits, the VA will appoint a fiduciary for a veteran who is deemed unable to manage their benefits. A court order or a medical documentation of the person's condition is required. The VA will conduct an examination of the fiduciary. Usually this is someone chosen by the veteran, including a background check, credit review, interviews with the fiduciary, and character witnesses. That doesn't happen, by the way, in the Social Security representative payee. And I have all the details of how to advocate for a representative payee for, say, a community mental health program or social services. So if anyone is interested in knowing kind of like all the paperwork involved, you can put it in the chat, and I will be sharing my email at the end. You're welcome to write to me. Next slide. Lastly, there is the court-appointed guardian conservator. If a court finds that someone does not have a fiduciary and can no longer manage their money or property alone, a hearing is held to appoint a guardian or a conservator. This is a very expensive option. As a guardian, you're required to act in the best interest of the protected person and provide the court with regular, detailed accounting of your loved one's income, assets, and how the money is being spent. I think, if I'm not mistaken, it's annual. You have to report to the court on this. So with that said, again, I am not an attorney. If you would like more training on this, please put it in the chat, and Angela and I can work on seeing whether we can get a really good attorney to come and talk on these issues. Next slide. So what are some signs? What should raise your concern that someone is being financially exploited? Missing money or property, abrupt changing in saving habits or spending habits. You know, my credit card company, they have a fraud department. The minute they see that there is something odd purchased on my credit card, or or it is from some out of state, out of country, they shut down my card and call me, and I have to call them back, and they say, this didn't look like something you would buy. And 9 out of 10 times they're right. It was I was hacked. So really looking at, hey, this is not what they spend generally on. Or convoluted explanations for financial activity. Or you're seeing this sudden increase in ATM use. Or there are these large unexplained bank withdrawals, which really don't make sense. Or sudden excessive gift giving. And let me tell you, I've seen it over and over again, this excessive gift giving, suddenly. Or a fiduciary or a money manager or other person intercepts visitors or calls and doesn't let loved ones speak to them. They say, no, you're not going to talk. Or, they don't let you communicate with the outside world, with your network of friends. They kind of isolate you. And we're going to look at some of the risk factors a little later. Okay, so those are signs that should raise a red flag about financial exploitation. So with that said, I just want to do just a little bit of an introduction to dementia, because that was one of my questions, my poll questions, is dementia as a risk factor? And I just want to let you know that age is the #1 risk factor for dementia. That means as we grow older, we are at higher risk for dementia, which is an umbrella term, which describes a range of symptoms associated with cognitive impairment or brain dysfunction. And here are just some of them in this nice little infographic. Alzheimer's disease is the leading dementia in the United States. In Oregon, the second one is Lewy body, followed by vascular, which happens after a stroke or any kind of, vascular disease, and then frontotemporal. So these are all different kinds of dementias. But what I wanted to point out was that age is the #1 risk factor for dementia. Kelly, if you can just skip, the next slide, a complex symptom, just go to the next one. So I wanted to talk about these independent and living skills that we talked about earlier. So one set of them are called ADLs, activities of daily living, such as eating, mobility, bathing, toileting. The financial capacity comes under instrumental activities of daily living. So when I ask people, how are their IADLs? That's what I'm referring to. Are they able to manage their finances? Are they able to shop and budget? Are they able to access transportation? Are they able to do chronic disease self-management? Those are all those higher level activities of independent living, IADLs, and financial capacity is one of them. So when you see a decline in that, remember the first slide, it should absolutely raise a red flag for you, because guess what? What first declines in dementia is IADLs, not ADLs. And one of the IADLs is financial capacity. Next slide. And here is my little primer on cognition. If you see, when we refer to cognition and cognitive baseline, this is what we are talking about. learning and memory, language, attention, judgment, reasoning, how fast you process things, executive functions such as planning, making decisions, mental flexibility, organization and regulation, task initiation. These are all very complex functions that get affected when you have a dementia. Now, can you see if there was impairment in any one of these in terms of financial capacity? Imagine if you had learning and memory problems, and you had speed of processing problems, and you had judgment problems, and you had decision-making problems. How do you think that's going to impact your ability to make good financial decisions? Remember, Mrs. Johnston, the first case, the little case that I talked about? So this will be a good thing for you all to kind of keep in your back pocket, when you're doing any kind of assessment on capacity, to really look at, hey, these are the domains of cognition. If one or more of them are affected, yes, it is going to affect their ability to manage their finances. If you can't remember and learn, how are you going to figure out, when your bills are due or how much income is coming in, correct? Or if you have, you're slowed down in your speed of processing, you have to go to the grocery store. How can you make change or know, how much money to give the cashier and how much money you should get back when you can't process that in your brain, like you can't do mental arithmetic? So all of this is really good for you to know, so that you then know, how best do I need to support my client or my patient? Next slide. And look at this disease progression in terms of financial capacity. Normal aging, very minimal changes in your ability to manage your finances. If you have what we call mild cognitive impairment, you start getting emerging difficulty with complex financial skills, such as how do you read your bank statement, maybe paying your bills, and your judgment in where should you put your money or what kind of car should you buy. When you move to mild Alzheimer's disease, which I told you is the leading kind of dementia in the United States, by the way, 70,000 Oregonians have either Alzheimer's disease or an other dementia. Impairment seen in nearly every financial skill. Remember, we talked about the skill set, both simple and complex, and with rapid decline in a 1-year period, leading to financial incapacity. And when you have moderate AD, Alzheimer's disease, so if you're using a screening tool of any kind, it would be like scores of 20 and below. Global impairment of financial skills with probable financial incapacity in most cases. And then obviously when it is severe, there's a total lack. So you can see how the trend line is going precipitously downhill. Next slide. So dementia and financial capacity, degree of financial capacity strongly linked to the stage of Alzheimer's disease. That's what that earlier table was showing. Declining financial capacity is a good barometer for progression of both mild cognitive impairment and Alzheimer's disease. It's a very good barometer. I was calling it earlier what? A litmus test. Financial capacity is an instrumental activity of daily living, IADL, which is critical for independent living. Why? Imagine if you don't pay your utilities regularly, you're living independent. What's going to happen? They're going to shut down your heat and your light during winter. What's going to happen to you? Especially if you're on oxygen and you have medications that need to be refrigerated. Can you see the cascading effect? So it is an IADL. These activities are complex activities that allow the individual to live independently in the community. And we've already talked about other IADLs. Our focus is obviously on finances. Next slide. So here are some good questions about financial competence. Good general knowledge about what is happening to his or her money or investments. You know, that your client has kind of a good kind of general knowledge about it. Sufficient understanding of the concept of time in order to pay bills promptly. Sufficient memory to keep track of financial transitions and transaction and decision, and also obligations. Sufficient math, I would say arithmetic skills to balance accounts and pay bills and get change when you're going shopping, you know, which you're able to do like mentally. Maybe, you know, some of us now use our smartphones to use the calculator, but what if you don't even know, can't remember how to do that? So you still have enough knowledge to kind of do those skills. Significant impairment of judgment due to altered cognitive functioning. And so you're looking at all of this when you are trying to grapple with the issue, either as a professional, so human service professional, or also as a family member. So next slide. Here are some types of financial abilities. Basic money skills. Understands and identifies relative values of bills and coin. And you know, when I was a working clinician in Clackamas County Behavioral Health and the only geriatric mental health specialist for the county for many, many years, actually more than a decade, I used to carry in a little, what you call it, Ziploc bag. I used to carry some basic notes like a $5 bill, and maybe a $2 bill, I can't remember. And then coins, you know, like a quarter or a dime or something. And I would actually ask people to identify it. You know, what are these bills and what is you know, or what is the biggest bill, or what's the value of the largest bill, or just money in this bag. So very simple. Cash transaction. Assess cost of an item and understand sales receipts. You know, hey, this milk costs $5, egg cost you know, $7. I paid $20. You know, this is my sales receipt. Did I get back the right amount of change? Did the cashier give me back the right amount? Checkbook management. When and how to use the book. Do they fill out the cash register? Do they actually deduct what's going out? Do they know what's the balance, you know, in their checking account? Do they know what it means to overdraw, and you know, what is overdraft protection? All of that you're checking. Bill payment. Do they know how to read, pay the bill and dispute a bill? You know, you don't agree with the bill. Do they understand that? And then bank statements. Do they know what it means to have a deposit, what it means to withdraw, what it means, what the balance is? Can they actually understand it? Do they even know where their bank statement is? Next slide. Again, you know, I'm reiterating basic monetary skills, which any of us can do it with our clients. Are they able to identify coins and currencies? Are they able to identify the value? You know, a quarter is much more in value than a penny, you know, things like that. Counting coins and currency. They are able to accurately count groups of coins and currency and put them in their appropriate, you know, groups. This is, anyone can do this. You don't have to be like a psychologist. Here, next slide. Here are some good assessment questions. Please identify these coins and currency. What is money? What can you do with money? And you may say, Nirmala, that's insulting. Let me tell you, I've had a variety of answers depending on how impaired the person was. Cash transit, give me the exact amount of money you will need to buy this box of tissue or this gallon of milk or whatever is handy. You can actually show it to them. Sometimes just carry pictures of it. Please tell me the exact amount. Or, kind of round it up. If they say $200 for milk, it's obviously there's a problem. Asking them what is a check. Showing them their bank statement and saying, what are some ways you've spent your money during this last month? Financial judgment. How would you know that the price of this car is fair? Bill payment. If you had a question about this bill, how would you go about it? Or what would happen if you did not pay your utility bill? And then the last one is, we are encouraging everyone to ask, do you have a will or a living trust? These are just advanced care planning kind of questions. But if you want to stop at seven, you've still done a great job. So you can see these are very simple questions. You can even weave them into a conversation so that you're not in any way compromising your relationship with your client, making them sound like you're dumb or anything. You can just weave it into and that's exactly what I used to do. I used to weave it into my conversation. Next slide. More questions that you can ask for the bank statements, and about available funds. Where does the money come from? You want to know, tell them it's my social security or it's my pension or I get interest payments. What is their knowledge about it? And what do you use this for? I pay my rent, I have a mortgage, I have to pay insurance. So good to find that out. Can you show me on your bank statement what money is coming in and what's going out of your account? Which would be, can they read the statement accurately? Are you overdrawn at the bank? These are all skill questions that you're asking. Next slide. These are questions about understanding of responsibilities. You have an electric bill to pay. How do you do that? What happens if you don't pay your electric bill? Which of these has a priority, paying a bill or going out with a friend to the local cafe? If you had to choose one or the other. What is important to you about your chosen option? If they choose one or the other. If you saw a new item that you wanted to buy and you had $30 to spend, so you had to spend it on the item or on food, what would you do? What would happen if you didn't have enough money to pay a bill? What would happen if you got into debt? And let me tell you, I've worked with clients who were exploited by credit card companies. They were sorely impaired and they would get sold on these credit cards. And believe me, they would have debt after debt. And then people would be calling them. I don't know how many letters as a clinician I have written to credit card companies that my client is unable to pay, he's severely impaired, has dementia, and that it was incumbent on them to do their due diligence. But yes, what would happen if you got into debt? And that was exactly what was happening to several of my clients who were getting multiple credit cards, sent to them. I don't know whether things have changed now. Next slide. So here is some red flags. Aside from you asking all those questions, for financial impairment, a diagnosis of a medical condition that affects cognition or functional ability. So it's more than just Alzheimer's disease or dementia. It can be strokes, it can be some kinds of cancers, it can be some other kinds of neurological illnesses. So good, thorough assessment. Impairment in basic cognitive tests, which I was talking about earlier. Noticeable change in appearance or hygiene. History of recent loss of a partner who may have been managing the finances. Remember, I talked about earlier. One could be the cohort effect. One could be that the partner was compensating for the cognitive decline of the other partner. And new family members or caregivers suddenly accompanying your client to clinic visits or to the bank. Then evidence from direct reports. So caregivers or family members are reporting to you that their loved one is having difficulty with common financial skills, like calculating change, writing a check, having their financial documents organized, such as tax documents or bank statements. They are just unable to manage their assets. Forgetting to pay utility bills, or they have a eviction notice. They just seemed confused all the time and are talking about missing funds in the bank account. And just overall, just they're very erratic and uncharacteristically, they're making uncharacteristic purchases or giving gifts, which doesn't make sense. Or accusations that people are stealing or mismanaging their money. These all should raise a red flag. Next slide. So these would be good questions for you to ask family members or to the person directly. Who manages your money, your investment, your property, whatever? Who helps you manage that? Do you have anyone beside yourself on your checking and saving account? And how long has this been this way? That you've made this arrangement. Are you having any problems? And you can even be very, very direct. Are you having problems making change? For example, or calculating a tip, which is all kind of mental arithmetic. When was the last time you were late paying a bill? And you can be asking this to a family member too. When was the last time one of your checks bounced? Because you had overdrawn on your account, because you can't understand your bank statement. Have you received any letter or phone calls from your bank because they are concerned? Or has anyone stolen or cheated you of money? And again, these are conversational kind of questions, where you can put the person at ease when you are kind of asking these questions in that style. And I always tell people, mental health, behavioral health, all is part science and part skill. I can teach you all of this, but it's really the skill and the practice of how you incorporate it into your practice, which is really that skills, practice, where it becomes, very natural for you. Next slide. Remember I showed you the primer on cognition, and then on the right-hand side was all the kind of tasks under executive function. What happens when that gets impaired? And that is right in the front of your brain, your frontal lobe. That's where executive function resides. In fact, that part of the brain is frequently called the CEO of the brain, Chief Executive Officer. If that gets impaired, these are some things that could happen. You can't transfer learning from one area to another. You may not be able to understand consequences of not taking actions. Remember Mrs. Johnston in that first example I gave, she was not able to understand the consequences if she did not pay her rent. So that was noted in the assessment. You may not be able to manage changes in financial arrangements or the way bills are paid. You may have difficulty understanding details of a contract, that you're signing some kind of a contract. with you don't have the cognitive ability to understand. You may have difficulty making money transactions. You spend more than you can afford. And it goes on and on. You're giving these gifts with and jeopardizing your own self-interest or your future. So lots of things happen when your executive function gets impaired. And it'll be a good thing to take that list and then look at these questions, and you will clearly see how they kind of align really well with all of those executive function tasks. Next slide. So here is a whole list of warning signs that we are going to go over. Number one, taking longer to complete everyday financial tasks like preparing a bill or writing a bill and mailing it on time, filling out a check register, which is very important when you're on limited income, or filing income tax on time, or making arrangements to file it on time. That should all be, hey, a warning sign if that's not happening. Next slide. Number two, reduced attention to details, having troubles identifying overdue bills. In fact, when I used to make home visits, the first thing I would look at is piles of unopened mail on the floor, on the table. It was clear they had not opened it. And there were tons of overdue bills that needed attention. Finding details in a bank statement, did I write a check to this particular company? They don't know how to look it up in their bank statement. Or appropriately filling out the columns in the check register. Next slide. Another warning sign, decline in everyday math skills. So that you're having troubles calculating a return on investment. That is huge. Figuring a tip. Making several calculations at once. I bought milk, I bought bananas, and I bought bread. I'm giving $20. How much should I get back? You're doing this all mentally. When you have a cognitive impairment, you can't. And what happens is you are unable to do these kind of what we are calling like basic skills. And you can end up, giving too much money, not giving enough. It can be a terrible outcome. Next slide. Decreased understanding of financial concepts. You have difficulty with understanding healthcare concepts such as a deductible. And I can tell you, even with an intact brain, people have difficulty understanding. Can you imagine if you have an impairment, you're trying to explain to someone that you have a deductible, and some of this is so complex, in Medicare and all of that. So understanding, say, what a deductible is. Or what some of the terms in a bank statement, like how much interest are you getting on this savings account? Or what is the minimum balance requirement in this account? They're no longer able to understand that. Next slide. Another sign, difficulty identifying risk in a financial opportunity. So you have trouble identify what is the key risk in this investment. Or understanding, more often it would be the second one, at least with in my case, with the kinds of people I worked with, was understand the risk of mail and telephone fraud. How do you protect yourself from it? How do you discern, hey, this guy is a con artist or he's a scam artist, instead of being duped? And, I know a woman who changed her roof about 6 times in 4 years before we all could get a conservatorship in place, because of these really nice con artists who would come and kind of inch their way into her life and meet some kind of deep psychological need. But also she was impaired, and sure enough, she would be writing checks for changing her roof. Next slide. So look at this. This is the latest data I could get from Oregon, which was 2019. 17, and my citation is at the bottom, of the community allegations. So this is not of institutions, of the community allegations, meaning the alleged victim lived in a variety of community settings, and the alleged perpetrator is not an employee or agent of a licensed residence facility. Abuse or self-neglect was determined to have occurred in 3,672 cases. Of those, guess what? 32% were for financial exploitation. The highest, the biggest number, was very vulnerable people financially exploited. And actually, this continues to this day. It is the leading form of elder abuse in Oregon, is financial abuse and financial exploitation. Let that sink into you. Of those cases, 1/3 were for financial exploitation. And look at, next slide, look at the DHS definition of Department of Human Services definition of financial exploitation. Wrongfully taking by means including but not limited to deceit, trickery, subterfuge, coercion, harassment, duress, fraud, or undue influence, the assets, funds, property, medications belonging to or intended for the use of an adult. Or alarming an adult by conveying a threat to wrongfully take or appropriate money or property of the adult if the adult would reasonably believe that the threat conveyed could be carried out. Misappropriating or misusing money from any account held jointly or singly by an adult. Failing to use income or assets of an adult for the benefit, support, and maintenance of that adult. And by the way, financial exploitation does not only happen to older adults, it also happens to people with a whole range of disabilities, including people with serious mental illness and people with intellectual and developmental disabilities. Our population today that we are talking about is older adults. So that data I gave you is for out of DHS older adults. So next slide. So there are many kinds of exploitation. So I would just wanted to point them out. It could be coercion. It could be you're having money management difficulties, so someone takes advantage of you. It could be financial entitlement from family members. Hey, this is my money, so I'm not going to let mom spend it on what she needs because this is my inheritance. It could be just outright abuse and theft and scams. Next slide. So what's the difference between financial abuse and fraud? You know, we always talk about financial abuse and financial fraud. At the crux of financial abuse and fraud are the identity of the perpetrator. Elder financial abuse is committed by people in positions of trust, whether it's a caregiver, you paid caregiver or family caregiver. It could be a family member. It could be adult grandchild. It could be your daughter. So these are people who are in positions of trust. Can you imagine? That's the kind of the ultimate betrayal, correct? Fraud, the perpetrator is a predatory stranger, kind of like the scam and con artists, who call you on the phone or come to your door and ring the bell. So at the crux, it's the identity of the perpetrator. So in abuse, it is a person that you trust, and in fraud, it is a predatory stranger. So keep that in mind. Next slide. And we talked about undue influence a lot. So what is this undue influence? It is someone exerting undue influence on you by persuasion, pressure, or influence short of actual force that so overpowers the dominated party's free will, in this case, an older adult. So it dominates their free will or their judgment that he or she cannot act intelligently or voluntarily, and will kind of bend in favor of whoever that person is putting that pressure, in favor of what they want. That's what undue influence is. And by the way, now it is recognized by courts. And undue influence happens in many other arenas, not just in finances. You know, in cults, in many people who are in domestic violence situations. This kind of construct plays a big role, but I am talking currently here about finances, where, for example, a caregiver comes into your life and puts undue pressure, short of abuse, on getting you to sign off all kinds of things to them. Or a beloved grandson who has a drug problem. Grandmother, if you don't give me this money, I'm going to stop loving you. Or, you know, and let me tell you, you may think, what's Nirmala saying? I have heard all kinds of things from family members who are putting pressure on their frail, older family member. Next slide. Undue influences, when a person uses their role and power to exploit trust, dependency, and fear of the older adults. So they exploit that. They use their power to deceptively gain control over the decision-making of that person, in our case, the older adult. It's likened to tactics used by cults in brainwashing and perpetrators of domestic violence. The law recognizes the process undermining self-determination, and some transactions made by a subject of undue influence may be voided if it's challenged in court. It is very difficult to detect, as persons subject to it fail to recognize that it's occurring. Remember, it is generally happens with a person you trust. So very often older adults don't recognize it, or feel shame to recognize it, or may not have the ability to recognize it. So it doesn't get detected a lot. Next slide. So what can we all do in our communities? You know, many of you have gatekeeper programs and all that. What can you do to look out for this undue influence? If you see someone, you know, who's kind of doing this, gaining, you know, I just learned this the other day, you know, the term con artist. You know what con, I didn't know that, comes from the word confidential, or he's your confidant. That's how they groom themselves. So what can you do as people in the community, you know, when you see something happening? How much time does this alleged perpetrator spend with the older adult? You're kind of suspicious. Who's this person? They suddenly appeared and they're spending, you know, every day in their home. Is this perpetrator an acquaintance or family member? Are there signs that this perpetrator has financial, mental health, or substance use problems? Does the older adult have the mental capacity to make these decisions that they are making, you know, with this new person in their life? Next slide. So why are people with dementia in particular at risk, vulnerable to abuse of all kinds, but also to financial abuse? They have some degree of memory impairment. They may have communication difficulties because language gets impaired. In fact, one of the earliest signs of Alzheimer's disease is not memory impairment, but language problems, word finding difficulties. They may have compromised judgment. And guess what? As the dementia progresses, so does the risk for all types of abuse. By the way, 1 in 10 older Americans gets abused, not just financially, all the other kinds of abuse, 1 in 10. And we feel that is an underreporting. So it's a very big problem. And why are they so much at risk, people with dementia? Next slide. In addition, they are frail. They are obviously physically and cognitively impaired, because that's why they have people in and out of their life. They are dependent. they're isolated, or they're even then made more isolated by the perpetrator. And frequently they're unable to report what's happening, or some degree, even if they have some abilities, they may feel shame, or they may want to protect their perpetrator, who could be a daughter or a beloved grandchild who is exploiting them. So all of these reasons puts someone at risk. And next slide. And by the way, I just want everyone to know, June 15th is actually World Elder Abuse Awareness Day. And I hope all of you on this call will do something for your community in raising the awareness of elder abuse. So it is World Elder Abuse Awareness Day, and our goal is zero tolerance for elder abuse. So if anyone is interested in exploring that, please write to Angela and me. So all of us on this phone call, I would say the majority are human service professionals of some kind. And I always like to talk about what underlines what are the ethical principles that we all are obligated to adhere to. So it will give you a framework. Non-malfeasance, that is obligation to not cause harm. Beneficence, actually an obligation to do good and remove harm. Autonomy, obligation to respect our consumers' right to decide, act, and experience the consequences of their actions if they have the capacity. Justice, obligation to provide equal treatment for all individuals by acting in a fair, equitable, and just manner, and avoiding discrimination in judgment and action. Veracity, obligation to be accurate and truthful in all we do. And let me tell you, in our history of medical and healthcare, we have not always been accurate and truthful. We have not adhered to the principle of veracity. And then fidelity, obligation to serve the well-being and best interest of an individual without divided loyalties. That means your loyalty or your fidelity is to your consumer, what's in your patient's best interest. So I just wanted to highlight these ethical principles that kind of underline all of our work in healthcare and in human services. Next slide. So in conclusion, I would really encourage you to educate older adults and their families about the need for advanced financial planning. Recognize the signs of possible impaired financial capacity. Assess financial impairment in cognitively impaired adults. Recommend interventions to help patients maintain financial independence as long as possible. Don't jump to appointing a conservator. How about, can someone help them pay their bills? Do you have a volunteer force that does bill payment? 5, know when and whom to make a medical and legal referrals to, if that is outside your scope of work. Next slide. I've given you a few resources which are really good documents for you to check out, but really the next slide is really something which I would urge you to take a look at. It's very small, on my screen, but you will be getting a copy of it, but it really gives you a workflow or a decision tree of when and how you should do a assessment for financial capacity. Next slide. And here is my email address for you to contact me if you have questions, concerns, you want some more information on this subject. I welcome that. And with that said, I have concluded my my presentation for today. So Kelly, if we can remove this and just go back to a gallery view, that would be great, if that's possible. Or we could, the panel is available. Let me know if there are any questions or comments, because I was not, opening up the chat box or anything. So thank you all again for inviting